type in 111 in the chat. If you can see my screen, hear my voice. Thank you very much. I think that is cool. That's cool. Okay. Right. I will begin. I'll begin now. All right. Sorry? Mtu hajaosha mkono. Okay. Right. Yeah, so I think you could not see me. Now you can see me and hear my voice. Okay, those of you who want to turn your cameras on, I would, it's okay. All right, so I'll make it a more interactive session, okay? So you can ask questions, you can, we make it very interactive. This is training lessons and so on. And I'll do, all right. Yeah, so that's it. All right, Jeremiah Kendagor is my name. I'm sure you know already from the screen. So I'll just do a quick overview of what options are, because binary options is part of a bigger basket of binary of options. Okay, trading on options. So I'm just still trying just to set up the screen here briefly. So if you're good, if you can hear me loud and clear, I think we have gone through that, so you can hear me. Binary. What is binary trading? Okay. Binary trading basically, so you can mute yourself unless you want to speak. All right. You can mute yourself unless you want to speak. So what is binary trading? Okay. And as I said, I just want to do two things. I want to just give us a simple explanation of what options are. Then we will know that binary is part of that concoction of options. Then from there, I want now to go to the platform of IAM and actually see how IAM makes you crack the binary option trading thing completely bust and will make you money right from the gate. All right. So that is all that I want to share with us today. Define what options are, define what binary options are, and then we move on. Of course, whenever you talk about trading, and more specifically, when you are telling people that we trade, we make money, we also need to give a disclaimer, and that is that trading on margin, okay? Every trading, foreign exchange more specifically, is trading that is done on margin, and so it has high risk, okay? And may not be suitable for every person, for every type of investor. There are people who like investing in property. There are people who like investing in treasury bills, treasury bonds, many other things. And then the other thing also that we need to mention here, kindly, if you are not speaking, kindly mute yourself, okay? Because the whatever will always pick background noise from wherever you are. So past performance is not an indication of future results. So whatever we say here is past results and may not necessarily be replicated in the future, okay? The high degree of leverage, especially when it comes to binary options, can work for you, also can work against you, okay? So when we are talking here, we are not giving an advice on trading and so on. So let me just now go to terminologies and let me explain here. Now, options is a very wide subject, okay? And there are volumes and volumes of books that can be written about options, okay? I'm not here to try and demystify all that, but the simple definition that I give for an option okay, and not necessarily binary, is that an option can be considered, okay, as an insurance premium that is paid by the buyer of the option to the seller of the option to guarantee the buyer the right to buy or sell an asset at an agreed price, okay, in the future. That price is called a strike price. All right. I don't know whether that mouthful of definition is like, but if I could just give us a simple illustration, what that would mean in real life, how options came about. Option comes from the word an option. You have the option to exercise your right or not to exercise your right. So you have an option. Now, let me give you a simple scenario. Normally in the bank, we because that's where I come from, and these are the things that we deal with, options and all that. A client, for example, like, let me give a simple arbitrary example, Safaricom. Safaricom can approach a bank and say, and tell the bank that in 3 months' time, I am going to be importing certain equipment, say from France or wherever it is, and it will cost me, it costs Safaricom, say, $20 million, right? $20 million. So the bank, I mean, Safaricom would tell the bank, I am not very sure where the price will of the dollar will be 3 months from now when I need to pay that $20 million. All right, but I would like you, the bank, to guarantee me a particular price and tell me that on that day I can buy those dollars at this particular price. Say, for example, right now, I don't know where the dollar is to the shilling right now. Let's give it for illustration purposes. Let's assume that today, let me get a writer here, annotation. Wait, how do you write this thing? Draw. So let's say today the shilling is going for $100 to the shilling. All right. So Safaricom comes to the bank and tells the bank, 3 months from today, I want to buy the dollars from you at 100 shillings and not more. Okay. So the bank will say, fine. You want to buy dollars at 100 shillings to the dollar in 3 months from today? That's okay. But we are going to charge you a premium. Let's say they charge maybe let's say $3,000. Okay. Oh, sorry, $300,000. Or maybe that's a lot. Let's say they will be charged, say, $10,000 for that. So $10,000, the bank charges Safaricom so that to guarantee Safaricom that Safaricom will be able to buy $20 million 3 months from today at 100 shillings. All right. Now, so this particular premium, okay, is what we are terming here as the insurance premium that Safaricom pays the bank to guarantee that they will have the right to buy dollars at 100 shillings 3 months from today. So this is the strike price. 100 is the strike price. The 10,000 that the Safaricom has paid is the insurance premium that now they pay to the bank. Now the bank has a problem. How can the bank guarantee that the money, the price of the dollar will be 100 shillings? Now, this is an option, meaning what? Meaning that if 3 months from today, the price of the dollar will be, say, 120. Okay. If the price of the shilling of the dollar will be 120, the Safaricom has the right to exercise their right to buy the $20 million at 100 shillings and not 120, where the price is at that time. So how does the bank guarantee, make sure that they don't lose? Because at 3 months from today, the price would be 120 or 130 or 150, okay? There is also a possibility that 3 months from today, the price would be 80 shillings to the dollar. Now, if it is 80 shillings, what will Safaricom do? They will opt not to buy at $100 because it's an option. They have the option to walk away because this is this insurance premium only guarantees you the right to buy, but not the obligation. All right, not the obligation, the right, but not the obligation. Now, so that is what an option is. Now, so now we come back to the bank. How does the bank guarantee itself that with this premium they have been given, they can protect themselves from not losing by the shilling going to 120, and the customer will come and buy at 100 shilling and not 120, okay? So let me wrap these things now. So how the bank does that now is by using a model that the computer will compute for them called option pricing, how they come up with that premium and so on. Now, some of the terminologies, like I said, I don't want to do a whole lecture on this, but I've defined that an option is a premium, okay? It's the premium that is paid by the buyer from the seller to guarantee a certain price in future, okay? Now, the other thing that also you need to know is that Safaricom can also sell an option to the bank. So in options, anybody can buy and anybody can sell. The customer can sell to the bank and the bank can also buy or sell to the customer. So in an option, there are certain terminologies that are used. First of all, it's a contract, okay? Let me get this writing again. Okay, it's a contract, okay? And it can be a call, meaning when it is a call, it is the right to buy, okay? So when you buy a call, it means you are buying the right to buy. When you buy a put, you are buying the right to sell, okay? The strike, of course, is the price that you agree, the future price that you are agreeing. Now, between the time you are buying the option and the time the option is coming to fruition, what we call the expiry date, you can either be in the money or out of the money, all right? Now, the other thing that the bank uses to be able to hedge itself is these things called the option Greeks. I just want to define them briefly, all right? Let me wrap this again briefly. Okay. If you are following me so far, type in there 111 if you're following me so far without unmuting yourself. Okay. Now, what are option Greeks? Now, the option Greeks is what also the bank uses to hedge itself. When they take that premium that the customer has paid, they use that premium to hedge themselves behind using what the computer will compute as, and what we normally define as the option Greeks, okay? And these option Greeks are there are five of them, okay? Now, there is delta, gamma, vega, theta, rho. I don't want you to, by the way, I'm just giving you this as history, yeah? So don't tell me that you can't trade options because you cannot understand it. You don't need to understand all this, all right? You don't need to understand all this, okay? So delta has to do with the price of the particular option that you are doing. So the price of the shilling or the price of the dollar or whatever it is, That is what we call, that determines what the delta is. The strike price, so the spot price is where the market is at the moment. The strike price is the price that you are agreeing with the customer. Then there is vega, which is the volatility, how much the price is moving up and down. Theta is the time to maturity, the difference between now and that time. So all these Greeks here is what the computer will use to determine what the price will be, okay? Or how the bank will thereafter hedge itself. Now, this is a more definition of what those particular option Greeks are. Now, the other thing that I wanted to just mention here that now culminates into what we call binary options is that you can structure an option into whatever model you want to do to hedge yourself in future, okay? So you can do what we call a long call, a covered call, a bull call spread, a put option, a straddle, a short straddle, all this that you can see on your screen, okay? These are different types of combinations that you can have. Now, the complex these particular combinations are, the more interesting that they are, okay? And the more hedging that it gives to these fund managers or these treasury people that are running big treasuries like the ones I've mentioned, either Safaricom or Kenya Power or wherever it is, that they need to hedge themselves, all right? But let me now come back home that from all these combinations here, you can come up with what we call a binary option. Now, a binary option will have stripped out everything else until you only have time duration, okay, and the premium that you pay. So the premium that you pay is the investment that you put whenever you are buying a put or a call, okay, and that would, and of course, a call is when you think that the price will go up. A put is when you think that the price will go down, okay? And you specify your time duration. Your time duration can be 1 minute, 2 minutes, 3 minutes, even up to 1 year, okay? So those now, we come now to binary options, all right? And now, I don't want to go into all that. You can realize that you can go to college for a whole 3 years to just learn about options, okay? Because it's a very huge subject. So why I also tried to bring in that particular aspect of what what options are and what binary options are is because sometimes people think that binary options are just betting, okay? It appears to be betting, but it's not really betting. There is actual transactions that go on behind what we are calling as binary options. All right. So I just want to give that particular story. So that you know that it is real, whatever. Now, I don't want to show that particular clip that just came there. That's one of the top traders on the platform of IAM. And the first time I prepared this particular slide, I was actually very impressed about his progress in his trading. He traded $500 to $1.2 million in 1.5 years, okay? But of course, according to IAM, we are not supposed to mention figures and numbers, okay? It's against the policy. So I don't want you even to ever imagine that I showed you that particular clip before that. So basically, what is the objective in binary trading? Binary trading is putting a buy or a sell and determining that from here to here, if you buy here within this duration time, you win. If you sell at this point, you win. Okay, so you buy or you sell or buy. Okay, let me just, when you can determine the price will be lower or higher than the present price value for a predetermined future. okay, for a predetermined future. So that is the only the objective that you need to have. Now, the target to be able to be successful is only to win a few number of wins, and you are in the money for the particular session that you are targeting. So if you target, for example, to be making 8% per session, okay, and the amount of money that you are putting on the line is 1% of your account, you need to make 6 wins, okay? If you are doing 2%, you need to make 4 wins. If you are doing 3%, you need to make 3 wins. If you are doing 4%, is 3 wins. But look at it look at it this way: 5% of your account, risking 5% of your accounts of your account, and you only need to win 2 wins, and you are done for the day. Okay, so 2 wins for 5% risk, and you are done for the day. You will have achieved your 8%, and you are done. What we normally, of course, recommend is that you can use 3%. 3% of your account is quite reasonable, okay? And you target to make 3 wins, and you are done. Even if you do 2 wins at 3%, you would be more than 3% into the profit that you need. Okay, now let me go to IAM and show you exactly how IAM gives you the success on this. Okay, first of all, there is a schedule that you can learn, but let me go practically into the back office and show you how you can do HFX. All right. So let me get that going. 1 second. All right, so when you are on your back office, IAM.center, you just log in, okay? I don't know how many of you can see my screen, the IAM.center screen. If you can see my IAM.center screen, type in there 222. Oh, thank you, Mudeo. Okay, so when you log into your back office, to your IAM.center, okay, this way you go, this way you get your education, your competition, your academies, your PIP talk, your go live, okay, your strategies, okay, and so on. Now, you normally would go to the academies to get the training for HFX, okay? So if you are not subscribed to HFX, for example, you could be subscribed to foreign exchange. You need to buy. You need to have HFX as an add-on. It's only $50, okay? And that is why I mentioned that a better way to do your IAM is to go for Elite, okay? When you go for Elite, you have everything all together, all right? So. So you have HFX Academy, okay? And you can go through the training just like any other training, okay? Like if I can actually click that, you find the series here and so on, the 100 series, what is HFX, what is traded, and so on. By the way, this training here is almost similar. It's actually the same as the one on foreign exchange. So if you have done foreign exchange, you can completely just come to HFX and you will be home and dry, and you can go through all these trend lines, pullbacks, breakouts, and all that. You can see it's almost similar. All right. Now, what I want to show us is go live. Go live briefly. Now, the beauty about being in IAM and doing HFX with IAM is that you can be able to follow the top educators. And in fact, if you can check here, Millie Mills is one of the top rated educator on HFX, followed by Jonathan Nunes, followed by Matthew Thayer. Again, this is the person that I mentioned that he grew an account of $500 to $1.2 million in 1.5 years, which is quite incredible. And following a simple system. Now, the beauty about trading HFX through this platform is that you don't need to trade alone, all right? All the sessions are live, and you can actually trade with the live educators live. All you need to do is to come here and get the live the schedule on when they are coming on. In fact, you guys are very lucky. Before, actually at the beginning of this year, when I joined HFX, there were very few educators. There were actually only 3 English educators. Right now, we have a ton of them. We have a ton of them. All these, all right? All these are HFX educators, and they call trades, okay? Not only do they train, they actually call trades during their session. And remember, the trades only take 2 minutes and you get your money. And you only need to win twice or thrice and you are done for the day. You can go and do your foreign exchange trading, okay? So that is the most important thing about this the education platform and what you can get. Now, what I want to show you are the strategies that you use for trading foreign exchange. I mean trading HFX, which is basically the let me see where it's here. Okay, the simplest way to go there is to go back to where we were. Okay, where we were. Let me go to where we were. Okay, let me go here. All right. When you are here, you go to strategies, okay? And then when you are on strategies, there are some handbooks here that I've not downloaded. I'll come and download these ones. All right, so here you come to HFX, okay? You click on HFX, and then you click on Liberty. Now this will take you to where you get the tools that will show you when to enter a trade and when to exit a trade, all right? All right, so here, they are available whenever you are a member of HFX, you have access to these 3 scanners. There is the Simple Scalper, and this one, Millie Mills really uses this particular Simple Scalper. And in fact, you can see that's why she's the top trader. She's the top few trader. So you just click that, and it will give you the trade ideas that you can implement immediately, all right? Okay, so there it is. Already, in fact, this one is almost at entry right now, and you can actually almost execute this for a sale, all right? You can actually see there was a sale here for 3 minutes, and you could have won that for 3 minutes, all right? And now it is back at the same level, and probably you can take it again for another sale for another 3 minutes, and we can actually win that particular trade, all right? So that is how simple this particular trading platform is. It is the simplest. You get the tools, you get everything that needs to be done. So I think today was basically an introductory class to be able just to show you what is possible. Now, these particular strategies, I just want to mention something briefly about them. The simple scalper is used for markets that are trending. What are markets that are trending? Not trending. Markets that are ranging. Markets that are in a range mode, meaning that they are bouncing from the Bollinger Bands from top to bottom. Okay, these are Bollinger Bands that are being used here. There is the SAS there. These ones are stochastics and also RSI and so on that are being used down here. So whenever you see this thing bending down, and by the way, just look what I've just mentioned. Right now, what I mentioned, you have already won that particular trade. I just mentioned that you could enter that trade and you would have won, okay? So whenever you see that cracking down, how simple is it to just win your trades every single moment? And so in 3 minutes, you would have made your money on that, okay? Now, pickpocket is for markets that are a little bit trending. They are trending in one particular direction. Okay, when they are trending, you use this particular scanner here. Okay, so this scanner here, whenever the price is above these two lines, it's for a buy, and you wait for this fractal indicators here. Whenever you see this fractal indicator here, you go for a buy, and you go for a buy for 3 candles. So this is a 5 minutes candle. So you go for 3 candles, which is 3 times 5 is 15 minutes. Okay. So for 15 minutes, that would have given you money and so on. So whenever you get this fractal, you go for 3 minutes and so on, provided it's above these two lines here. I can see that's given a signal here right now for a sell. Okay, so again, you can use that signal and enter for a sell for 15 minutes and you make your money. Okay, the web slinger is used for markets that are having a breakout. When markets are breaking out of a particular zone, okay, you use the web slinger. All right, so it shows you when markets are breaking out of a particular zone, like here. Okay, when it is breaking out of this these strings here, you enter for a buy. When it is breaking down on this particular web strings, you go for a sell. Like right now, it is a sell. Okay, on Euro USD, and you can sell it for maybe 3-5 minutes, and you will be able to win that particular trade. I think this one has actually been called both by the web slinger and also by the pickpocket. All right. Now that is a summary of the strategies. Now there is another powerful strategy that Matthew Thayer has actually created that is even more dynamic than this. It will actually give you the specific entries to enter any given time and make money. All right. Now, I want to open the session now to a bit more of a question and answer session. I think I've been talking the whole evening myself. So now let me open it up for question and answer session. Now you see how you can make quick money in HFX. HFX, by the way, HFX is not necessarily that you keep on clicking the keyboard very fast. No, you don't click it so fast. Okay, you click it even and you wait for a whole 1 minute and you make the money. You click it and you wait for 3 minutes or 5 minutes and you make the money. So it's not that you should fear and say this is something that is so scary. By the way, let me tell you, when you look at the platform, by the way, it's gaining a lot of currency right now. HFX is gaining a lot of currency even on the platform. Like you can see, as I was telling you at the beginning of this year, there were only 3 top trainers on the platform. The top trader is called Nes Fages. Okay, I don't know how to pronounce his name, Nes Fages. The other one is Matthew Thayer. there's Cabral. They were about those three who used to teach on English. Now, there are a lot. There are so many. So you can have so many sessions that you can budget for yourself and actually trade. The beauty about it also is that here in Kenya, those traders come very early in the morning. At 5, Ness is on. At 6, Matthew there is on. At 7, Nunes is on, okay? And sometimes Cabral. And then in the evening, at 5, Cabral is on. Nunes is also on at 7, I mentioned. And then in the evening also, Millie Mills comes in. So can you imagine those 2 sessions, you make money, all right? What else do I need to say? What else do I need to say? About brokers, okay? There are 2 types of brokers, okay, that have different types of ways in which you can trade with. There are those ones like the Fight Forex or the one that race options, but there are so many platforms. I think right now probably we cannot even mention all of them. Binary options and so on. So there are many of them that you can actually use. But yes, let me open the platform to anybody who has a question, you have something, a reaction to what I've shared. Now, have you seen what has happened to Euro? Okay, that trade you would have already won. Look at what has already happened on that. This particular scanner has actually called that, and you are already in the money. Right? So these are very powerful, powerful scanners. You just use. Yes, please.
Thank you very much. Thank you very much, Mr. Kendagor, for your presentation. I wanted to ask, do you need to do a demo account first? Do you need to open a demo account first? Or can you trade straight away with real money?
Okay. A number of platforms do not give demos unless you have placed some money. Like Fight Forex, you have to put in a minimum of $250 for them to allow you to have a demo account. But Pocket Options allows you to have a demo account. IQ Options allows you to have a demo account. I want to suggest that yes, it is important to trade a demo account before you put your money on the line, okay? Because there are certain things that you really need to learn not to over leverage yourself. Just as we mentioned, like Forex, okay? You will be tempted to over leverage. You will be tempted to do certain gymnastics that are available on the platform, especially there's something called double up. There is something called rollover. If you misuse those particular functions that the platform gives you, it will kill you, all right? So you need to approach some of those functionalities of the platform with a lot of caution, all right? But as I have told you, by the way, this platform, I Am platform, you will make money right from the gate. Because if you can restrict yourself to only trading with the top traders, restrict yourself to when they say sell, you sell. When they say buy, you buy. How else then can you lose? And you are trading with the top traders, okay? Of course, there are times when you will have a losing streak. Maybe you lose more than you gain that day. Again, you trade the next day, which is possible. But as I've told you, we have enough examples of people that have cracked this and made lots of money. By the way, if you check, let me mention this. Thank you very much. I'm using Fight Forex. But right now, I'm looking to start with another account very soon. Okay, Mudeu, I can see your hand is up.
Oh. Good evening.
Good evening. Good evening. How are you?
I'm fine, thank you. Thank you for the presentation. I just have 2 questions. Number one is on the strategies you've shown us. Are they that accurate that you don't even have to confirm them? You just go with with the tips they give you? And number two, is the profit margin the same as what is on FX?
Very good question. Very good question. Very good question. Let me answer about the tools. Tool first. Yes, these tools. First of all, you need to have learned about forex in general, just to be able to know how indicators interact with price action and things like that. You need to know things to do with their market structure. So basic education of forex is very imperative. You must go through series 100, series 200, series 300, series 400. You really need to know about forex. In fact, when you check when Matthew Thayer normally approaches his trading, he does not only use the tool, but he also goes to the charts and draws trend lines and support resistance concept in his mind. So you don't just blindly look at the chart and say, yeah, this is what the indicator is saying. But the indicator will help you to pull currencies that you can trade immediately, so that you don't have to say, can I trade with this pair? Can I trade this pair? So the tool is supposed to easily just give you what is most probable immediately. Now, before I give that was Mudewa who was a question. If I'm answering your question, you can lower your hand so that I know you have answered.
Sorry.
Now, let me talk about how much you are placing. Now, in trading HFX, you normally put in a certain amount, you risk a certain amount to earn a certain amount. All right. Let me write something here. I don't know whether I have the tool for writing here. Draw. Okay. All right. Yeah. So say you have $1,000 that you have invested. Okay. I mean that is in your trading account. What is 3% of $1,000? It's $30. All right. Somebody answer me. I mean, those who are mathematicians, $30 is 3% of $1,000. Right? Am I alone in this class?
Yes.
All right. So what you will do is this: you will risk 3% for that trade. Meaning, if you lose, you will lose $30. But if you gain, you will gain your $30 plus a certain percentage of this, normally 70%. What is 70% of $30? 20 how many?
21.
21.
21.
So
21.
21. All right. So
Yes.
So if you win this trade, you now will have $21 on top of 1,000. So your account balance will go to $1,021. All right. Then you risk again another $30. If you win that trade, you win another $20. So your account now will become how much? $1,042. Do you see now here, what is the percentage gain that you have made on your account? Almost 4%. You have done 4% of your account. With only 2 trades, you have won. 4% is already good enough every single day. All right, you can use the calculator on the internet to see when you win every day, two trades that gives you 4%, you are doing very well. Okay. No, so that also gives you a perspective of what happens. Now, what happens if you lose? If you lose, your account will go to 970. Okay, so you'll have gone down that much. To recover, you need to win 2 trades clean to recover what you have lost. All right. So that's also the other trick about binary. Okay, losing is costly, but winning is very sweet. Now, the other thing that I want to mention is that whenever you are going for a currency pair to trade, look at the payout. The payout are sometimes from 50% to 95%. The higher the percentage payout, the better it is for you. But normally, of course, the 95% are very tricky to win. The 50% could be more easier to win. But so normally we target to trade pairs that give us a payout of 70%. So whenever you see a 70% payout on a particular pair, trade that particular pair. I don't know whether I have, I'm clear on that one. So you can ask a question again if there is any other question.
I wanted to ask about the losing of the 30, the first loss. Supposing you double it into 2, what is it wrong to do that?
Oh, yes. Now that is very dangerous, and as I mentioned, those are some of the tricks that you need to learn to avoid on the trading platform. The broker will want to make it sound that it's very easy to do that. Okay, there is a strategy whereby you are saying that if you lose the first one, you will not lose the second one, the second trade, if you trade in the same day. Okay, so it's called the martingale strategy. It's a very dangerous strategy. Do not attempt that strategy. I tell you, it's the fastest way to kill your account. Okay, what Flora has just mentioned, and for the sake of everyone else who is here, has said that when you lose the first trade, okay, instead of you saying you have lost, now your account is at 970, you double this amount, and now you place a bet of $60 instead. All right. Now, if you win this trade here, what is the payout that you will have won? Somebody can compute for me at 70%. Type it on the chat.
42.
70% of 60. 60 times 0.7 is $42. So you win $42. So sorry. Thank you very much. Somebody has already written them here. So that means now your account will be 970 plus 1,000 plus 1,000. Sorry, 142. No, 102. Okay, because it's 42 plus 60. So you go back to 1,002 only. That means you have just gotten back your money by doubling. But what happens if you again lose that 60? Now your account will not only go down by 30, it will go down now by another 60. It will go down to 910. That is a serious loss. So don't do that. Don't double. Okay? And unless you are very sure on that, I think so. Where do you get the 14? Because 42 plus 60, according to me, is 1,002. But anyway. Okay, any other question? Any other question? Yeah, 1 or 2. It's supposed to be 1 or 2. So I think come next week, now that we have done this introductory class, that we have touched so many things, next week we probably now will have most of you on demo or whatever it is, or live. I would like us now to trade live next week. So we will not only be doing the lessons, now we will trade live next week. I hope that this will be fine with most of us. So is that okay with, is that okay? We can call it a day to day. Any question? All right. So the platform is very powerful. IAM gives you the best platform. Again, yeah. So next week I think we will do a bit of trading, a bit of learning the strategies to be able to apply on trading. Okay. So if there is no other question, I will want to call it a day. Thank you very much, and you have a good evening.
Thank you, Mr. JKK. This is Zachary and Faith. We are grateful.
Thank you, thank you, thank you.